Earnings per share class example number 3, convertible debentures. These debentures are convertible at the option of either the company or the holder of the debentures at a later stage. On 31 December 20.9, the issued share capital of Little Limited was as follows. Please take note, the way that the information is given, we are telling you there on the end of 31 December 20.9, that is the end of the year, the following information: 2.5 million ordinary shares was in issue at the end of 20.8 and at the end of 20.9, and then 5% convertible debentures issued at R1 each, so there are 2 million debentures at 2 million rand. The information here tells us there were no ordinary shares in issue during the years ended on 31 December 20.9 or 20.8, so we know there's no adjustments there. The profit for the year, 800,000 and 750,000 for the years ended 31 December 20.9 and 20.8 respectively. Then the information that we are interested in. The convertible debentures were issued on 30 September 20.9 and are convertible at the option of the debenture holders during the 20.14 financial year at R4 per share. So you must now realize we will give the information in different ways, but in this specific question, you've got a R1 debenture and the shares that you are going to purchase are issued at R4. So you will actually have to convert every 4 debentures into 1 share. Further, assume that the debenture interest for the 3 months ended 31 December 20.9 amounted to 16,000 Rand. In this specific question, just remember it is a class example. In this question, we gave you that the amount of interest that was paid was 16,000 Rand. In other questions, we might want you to actually calculate that, but please just make sure the information given in a specific question. Assume a tax rate of 28%, and then required. A. Calculate the basic earnings and diluted earnings per share for the years ended 31 December 20.9 and 31 December 20.8. The second part of the question then requires you to disclose this financial information. Let us look at the suggested solution for class example number 3. Firstly, look at the calculations for basic earnings per share. Remember, we have to calculate the basic earnings per share and thereafter we have to calculate the diluted earnings per share. For basic earnings, we take the profit for the year. There's no adjustment. And remember, already included in there, because it is the profit for the year, we have already deducted the interest expense, normal. So there's no adjustment for that, no need for that. Then calculate the weighted average number of shares for the basic EPS. And as you can see there, there's no adjustments. So we can take the shares or the number of shares as was issued at the year end. And we use these figures to be able to calculate the 32 cents as a basic earnings per share for 20.9 as well as the 30 cents for 20.8. After you've calculated this, you must now go and calculate diluted earnings per share. And to be able to do that, we first have to see, must the earnings be adjusted to get your diluted earnings? And yes, because this was a debenture that will be converted into ordinary shares in future, we have to look and add back the after-tax effect of the interest expense. In this case, we were given the 16,000. In some cases, you'll have to calculate it, but here you were given the 16,000 for that specific period. Just remember to take it after tax so that you will be able to calculate the after-tax amount, and the after-tax is then the 11,520 that you have there. And in the prior year, there is no entry because there was no convertible debentures issued in that period, so therefore no adjustment, no calculation. Once you've calculated that, you get the diluted earnings for both years, 811,520, and of course the 750 for the previous years. Then you calculate the weighted average number of shares for diluted earnings per share. We start off with our basic earnings, the one-offs for the basic earnings per share, and adjust the possible convertible debentures, 2 million, and you will issue the shares at 4 rand each. That's why we divide by 4, so that will give us a 500,000 shares that will be in issue, but they were issued 3 months before year end, so we can only weight average it at 3/12, and for that reason we are now taking that 3/12 calculation there. And that ends up to giving us 125,000 as our weighted average number of shares that will cause dilution in the future. Again, we do not restate. We only weight it, as you saw there. We will weight this amount there, but we're not going to restate anything there because there was nothing to be restated at that stage. Once you've calculated this figure here, you will now go and calculate your diluted earnings per share, causing the dilution. And then finally, we must go and do the calculation of, or the disclosure. Remember that there are various disclosures that you have to do. Firstly, you have to disclose the basic earnings per share as well as the diluted earnings per share for the year and the comparatives in the statement, or rather below the statement of profit or loss and other comprehensive income. So there you have the profit for the year in your statement of profit or loss, and right at the bottom you will have that disclosure. But you can also be required to disclose in the notes for the year ended the earnings per share. And what you have to do here is show the reconciliation of the numerator used for the basic and diluted earnings per share. So there's the numerator for the basic earnings per share. You've got to show the adjustment that you made to get to the diluted earnings per share. So basically all the calculations that you did is now shown in your disclosures. But please, when you are asked to give the disclosure, don't mix it with the workings. Never mix it with the workings. And then a reconciliation of the denominator used for the basic and diluted earnings. Again, you start off with the basic earnings, basic one-offs as was calculated in the question. Show the adjustment that you've made, and then get to the final answer to get the diluted weighted average number of shares. Thank you.